Good evening, folks. So, I wanted to do an update. I looked at GDXJ, the Junior Gold Miners ETF, uh, 2 days ago. And so today I'm looking at GDX, which of course is the big daddy of gold mining stock ETFs. Uh, GDX has more money in the fund than all of the other gold mining stock funds combined, I believe. Uh, anyway, GDX is the big daddy. Um, the reason I prefer GDXJ is because when you look down at the component level, uh, there's a couple of things you notice. One is there's a quite a quite a tremendous overlap between the two ETFs. They have the same components to a large extent. And then GDX, the ETF that we're looking at now, it includes the really the big, humongous mining concerns, and that's not the when we're looking at the current bull market in precious metals. We don't, my opinion, what I'm doing with my own money, let me put it that way, I'm not investing in Newmont and Barrick and the big boys and Gold Corp mergers, all of that stuff. That's not where I'm putting my money. I'm focused on the emerging producers and the junior miners, and even some explorers who show promise. And I've got some techniques for finding those stocks that show promise. But anyway, right now we're focused on GDX. We are in the monthly time frame. As always, I start in a big picture and drill down. What we can see here with this red Andrews pitchfork is that GDX was in a price downtrend and has now drifted out. Here, of course, this is sideways waffling, and now it appears that we've got an uptrend started here, and again in our monthly time frame. In the let's look at these indicators so we can get them off the chart. MACD, both lines are above the center line, so MACD is telling us bull mode, price trend is up based on MACD, um, and lots of room to run before the MACD indicator becomes overbought based on that previous high there. Enough MACD. Stochastics, basically, as I see it, it's an energy indicator, and the gas tank is full. Price has plenty of energy to do whatever it wants to do. And that's all I read into that indicator. And so now we're focused on the price action. And so what I see here, uh, price has broken above this resistance level. Um, and I would say that the next price target is this, what is that, 42? So 42. That based on this price chart, monthly time frame, the next price target for GDX is 42, and no reason for me to think, based on this chart, that we wouldn't get there. So now let's drop down to the weekly. Again, let's get the indicators off the chart. Gas tank's full, energy's high, MACD's in bull mode on a buying signal. This is just a closer look at what we're looking at in the monthly time frame. It all, it's funny. I've drawn thousands of pitchforks on price charts, and it still amuses me when I see this kind of interaction with price clearly running into resistance at a median line of a pitchfork again, and so run into resistance, pull back, another surge up, runs into resistance again, has to rest, breaks above resistance, finds support on that level. And so that's where we're at right now in the weekly chart. Um, and so anyway, yeah, we won't anything else there, and we'll drop into the daily. We still got the same stuff with the indicators, although oops, before we leave the indicators, let's notice some potentially rolling over action. Yeah, so we're in our daily time frame, and so the MACD, and let me expand this a little bit. I don't like to, yeah, here we go. So the MACD histogram is, it has gone from this dark green, which indicates strong momentum, to the softer green, which indicates that momentum is waning um, from a MACD perspective. And with that said, MACD is still in the bullish mode. Both lines of the indicator are above the center line, and so we would expect primary trend in this price or in this time frame, the daily time frame, to be up. Okay, enough MACD. Stochastic, same kind of thing. Um, stochastics is way up here in the overbought, or the way I prefer to think of it is high energy. The gas tank is full, but one way to interpret this is that price energy is now rolling over. A little bit early, in my opinion, to make that judgment call, but something to keep in mind that energy may be waning. And let's reset our chart. And so now we can focus more on the price energy. And I'll zoom in here. And so I always like to put in my horizontal support and resistance, and so that pink line is the obvious level, and there's a lot of subjectivity in where you draw these lines. I could pull it all the way back down to the peaks of these price bars, and that doesn't look too bad. And I could also draw it. Yeah, it's a little bit funky all the way up there, but it doesn't look too bad. So now, instead of using the bodies of those price bars, I'm using the peaks, or the top of those whiskers, the upper tail, um, as the level for that support resistance level. Another thing that we can do, and sometimes I'll do this. So really, what we want to think about with support and resistance is that it's a zone. On our price charts, we draw these straight little lines and pretend that, okay, there's support and resistance. Reality is that it's more of a zone. And so anywhere in this gray area, if price wants to find support or resistance, I'm okay. What we see currently is that had a bullish gap up through the resistance at the top of this pitchfork, and is now working its way sideways along that potential support level. It's a little bit early to declare that that's actually a support level. Price is overbought, So, when we're trying to decide, okay, can price move higher from here or should we take profits? Uh, One of the indicators of overbought and oversold are the moving averages. And so in this case, we can see that what we've got on the chart is the 50 and the 200 moving day averages. The 50 and 200, the two lines are oversold relative to each other. So the 50-day moving average is quite, and I think I said oversold, I meant overbought. So yes. So the 50-day moving average is quite overbought relative to the 200-day moving average. And we can see, if we go backwards in price, when the 50-day moving average gets up to this level relative to the 200, price tends to pull back, give that moving average a chance to come back in line more with the 200-day moving average. Um, and so here again, very extreme overbought here. This was the 2016 rally. This rally in the mining stocks was extremely quick, very impulsive rally, and of course petered out quite dramatically as well. But anyway, that was then. This is now. So in the daily time frame, we've got this bullish gap. Price has jumped up above a support resistance zone. Unfortunately, price has run into resistance at the median line of this next Andrews pitchfork. As time progresses, we draw each pitchfork as it makes itself known. And so that's a little bit of a cause for concern, is that we're bumping into what could be resistance there. Let's drop down to our next time frame, which is the 4-hour. And again, so stochastics could be indicating that price energy is waning. But notice that it doesn't have to be. And this is one of the challenges with indicators. If you decided to sell, you used that, and I'm not suggesting that you do. I certainly wouldn't. If you used that stochastics crossover as a sell signal because it was headed downwards, well, yeah, okay, it headed downwards and then it moved back up. Now we're down we're a little bit lower. But it looks like our moving average could be turning back up again. So, I don't want to base any entry exit signals on an indicator, in particular stochastics. But I do appreciate the stochastics indicator as a quick level of energy indication. And in this case, it's telling me that price energy is high. Potentially price energy is rolling over, but right now, today, price energy is high. And that's enough about stochastics. Let's look at MACD right quick. And we've got some rolling over action in MACD, both in the histogram and in the moving average, MACD, and the signal line. With that said, we are still, MACD indicator is still in the bullish mode, which suggests that the primary price trend is upwards. Let's not belabor MACD. Let's see, price action. That's what we always want to focus on, is the price action. And I like this, as we drill down into the lower time frames, deciding where exactly to draw a support resistance line tends to become more obvious. And so in this case, if we use the peaks of those price bars, and then the fact that we got basically this is a zoom through that horizontal resistance level, and then a pullback, a retest of that level as support, and then this is actually bullish action. We get a big, it's all relative, we get a price gap upwards, and then we have these price bars interacting with resistance along the median line of the fork. And so, so far, we can't, um, other than deciding do we want to take profits, partial profits, full on exit, um, there's no real action called for based on um, that chart in this time frame. There's the 1 hour. In the 1 hour, and of course, if you're not intraday, if you're not a day trader, who cares at this time frame? Stochastic, so energy level is low, but of course, that gives us energy, plenty of room to turn up and move higher. MACD, same thing. MACD was overbought back in here, but now it's had an opportunity to work off that overbought level. And so again, if price wants to turn up, go higher from here, MACD is not going to stand in its way. Let's get rid of those. Nothing really else to add there. I did take a quick look at the HUI Index. Let's get rid of these indicators. Again, let's start. This is our weekly, so we're not going to start on the monthly. It's just going to start on the weekly price chart. MACD is just super bullish here, in my opinion. Obviously, in bull mode, primary price trend is up based on MACD. We're on a buy signal, new high, so MACD is pushing up past the level of this previous high in MACD back in August of 2019. So a couple of bullish indications there from MACD in the weekly time frame. Stochastics indicator, price energy is high, gas tank is full, however you want to look at that. It's bullish. The pink lines, they've been on the chart for a while. I drew this, yeah. Obviously, yeah, there it is. I drew those pink lines before the big scary plunge. That's what I call that's first week in March. We got the big scary plunge in pretty much all of the financial markets. And of course, it skewed all of the markets. And from a technical analysis perspective, these spikes make our job challenging, but as always, we do the best we can. So, but anyway, this is the HUI Index in the weekly time frame, bullish action, price breaking out above that previous high, which of course now we've got both highs above the previous high of the 2016 mining stock rally. So again, this is very positive action overall for the mining sector, in my opinion. We'll drop down. What do we got here? Daily time frame. MACD bullish, perhaps rolling over. Histogram suggesting rolling over. Stochastics, we got plenty of energy, maybe some rolling over behavior. price, I think in this level I would draw that line somewhere probably in there. Yeah, but again, we've looked at that. A bullish price action where price has pushed up through this horizontal resistance level. See, that level served as resistance back here, and now price has pushed up above it, gapped even higher, and now is doing a sideways consolidation. So anyway, now we've looked at two different vehicles, both and broad-based vehicles from the perspective of the mining stock sector. We've looked at GDX, which is the big daddy of ETFs in the mining stock sector, and then HUI, which is kind of the traditional index. Certainly during the 2001 to 2012 bull market, the HUI was the primary index. Folks, we are well over 20 minutes at this point. Enjoy the rest of your weekend, and as always, trying to provide value. If you have feedback, I am always open to hear it.